Hey guys, how's it going? Welcome to the midweek market update. Hope you're all having a fantastic week so far. So, euro dollar obviously still stuck within this bullish weekly range. We have swept that weekly low, and we are starting to see price on the intraday time frame start to kind of move up with a lot of momentum now after we had that kind of full weekly retrace last week, and it is looking like potentially we may be starting to move up towards the top half of the range, where potentially we could start to look to take out this week high and potentially form that weekly higher high. But I would like to see a bit more commitment on the daily first. So obviously coming from a very nice demand zone on the daily chart, but in terms of actual price action and structure, I've kind of been caught in between two minds on how to view this sort of lower high here, whether that's daily structure and 4 hour structure, or whether it's kind of just 4 hour structure, because it is a reasonably large sharp move. But try and be consistent with how I'm viewing the previous price action, and it's kind of similar to this move here. I would say this one's a bit steeper. It did come up nearer to the EQ, but kind of how I'm going to treat this for now is just view this, essentially these moves, as the daily move. So that'd be the lower high, that'd be the lower low, that'd be the lower high, and I'm just going to view this as one daily leg, more so because this is actually 4 hour structure. So that way it just cleans that up for me a little bit, and helps me to be a little bit more consistent as well with how I was viewing that prior piece of price action here. Essentially what that means is this 4 hour high that we have broken in terms of the daily chart could now just be essentially a high that is used for liquidity inducement for this level here, where then we may just see a daily lower high, keeping the recent bearish daily trend intact, where we could have another go at the low. So that's kind of how I'll be treating this daily zone up here. Obviously it's not the cleanest of candles there. Kind of just refined the daily supply zone to these wicks here, and just seeing potentially if we do get some shorting opportunities, I will be looking for that move there. But yeah, just kind of with the overall setup we've had, this big sweep of liquidity, the run of the weekly low, pretty much the EQ mitigation of this strong daily zone, and the weekly being overall bullish. At the moment, I probably would expect we just get a short-term reaction, potentially pull back into some demand here, and then break out. So happy to kind of look for the shorts from here, just seeing if we can get a pullback that potentially could turn into a longer reversal. But at the moment, everything is looking reasonably bullish, but really I would like to see a decent daily close above this high here to really start getting that commitment that potentially we can start looking at these levels up towards these highs here for now. So only other thing to note on the daily chart is we did obviously have this daily inside bar, which price initially reacted from, but then what happened, that reaction failed and we pushed up higher. So we now do have a daily flip zone, right, a supply to demand flip, which I will be keeping an eye out on for potential buying opportunities there. So 4 hour chart, let's clean this up a bit. So from, let's see, Monday 31st, around this time, right, price pushed up. We struggled to close, I believe on the weekly open, or was that Friday? Yeah, the weekly open, I believe this was, we struggled to close up above the 4 hour swing high here, right, rejecting these buy to sell wicks, which were technically a 4 hour flip zone because we had this massive 4 hour demand zone here, right, and then that was kind of that first reaction of price coming into the zone. Right, we came in, moved up, creating that supply zone within those wicks right on a lower time frame, and then that gave us a bit of a 4 hour pullback there, but we didn't pull back very far. Obviously you can see we then pushed up a little bit higher, and then we came up into this kind of larger 4 hour supply zone here, which again wasn't very clear in terms of the candle. So yeah, just kind of taking the entire range there and left it that way, and you can refine that a little bit more on the lower time frame, specifically the 15-minute chart, which there were some shorting opportunities yesterday. Then we saw a bit of a pullback into this 4 hour region. So whether you had your demand kind of refined to that candle there, or if you kind of took the larger sell before the buy, or even if you just took that entire 4 hour range, of course any of those are valid. Just depends on your trade plan and how refined you want to be before potentially you start to look for long positions. If you take the larger range, kind of like how I've done here, then maybe once price comes into here, you may want to wait for a 15-minute change of character before you start looking for shorts. But obviously the more refined you go, if you really dig in and look for M15, M5, even M1 zones within the 4 hour zone, and once you see price hit it, then maybe you don't need to wait for a 15-minute change of character to the downside to start looking for shorts to play the 4 hour pullback. Maybe because you're very happy with how refined you've got your zone, that once price hits it within here, then you only need potentially an M1 reversal or an M1 change of character, right? So yeah, hopefully that makes sense. So we pulled into here, and then we got those long opportunities today to play that next 4 hour leg to make that 4 hour higher high up here. So yeah, that's pretty much where we are at the moment. We are still within this 4-hour range, so we haven't quite spiked up above it yet. So there, of course, is the potential that we could see more supply being filled and we could get a deeper pullback. But I think the fact that we kind of mitigated the EQ with this move here yesterday, and we saw such a sharp reaction, about 40-50 pips, decent sort of V-shaped move there, that would signify to me that a lot of supply has been filled. We've tapped into demand, and now it's caused that reaction to fail, right? It's failed to make a lower low. So that would now tell me that we now have that supply to demand flip, and I would be either expecting price to continue higher from here before we get the pullback into here, or potentially we could pull back during Asia, and then we could look for longs to then push this up into here, going into towards tomorrow and the end of the week. So yeah, that's really kind of how I'll clear that up. We'll come back to this at the end. Let's take a look then at the 15-minute price action this week. So pretty messy, to be honest, kind of until more so today, but the start of the week, a bit slow, bank holiday Monday in the UK. Excuse me. So yeah, we came, this black line here was that 4-hour high. We came up a bit higher into those buy to sell wicks, and then let me zoom in so you guys can see what I'm talking about. So we had that 15-minute breaker structure to the upside as well, right? So then we were playing within this high and this low here. We then got that change of character, right? We took this low here, and then you can see those series of mitigations during the Asia session, right? It's about 5 a.m. And then we had another sort of straight leg down here, and then that kind of leaves that being the high and the low, right, of that one internal leg. So then price came back up. You could have been looking for shorting opportunities within here, and then we got a break of that low again with that spike, right? And then we came back up to sort of mitigate this area here. You see it's getting very, very messy now at this point. And something you have to be mindful as well, if you were looking to take those shorts, those counter trend shorts, because the M15 and 4-hour were then bullish, you're almost already trading within the EQ of the range, and that's often where we see this very choppy and horrible price action. So not really my favorite trading conditions whatsoever. There are some trades within there which we're going to take a look at now, but if you didn't kind of trade any of this, yeah, I think that's absolutely fine. Where potentially it does get a little bit better is when price did try to take out the 15-minute low. We can see it just wicked it, fell to close below. Nice bigger momentum, big sort of liquidity sweep there. And then when it came back in, that's a decent area to look for longs. Or if you want even more confirmation, what can you wait for? You can wait for that 15-minute change of character, which we then got here. And then we pulled into later towards the end of the New York session to potentially look for longs to then play that next high there. So on Monday, I think the best opportunity was when sort of these longs started to set up, when it failed to form that lower low. But let's take a quick look at this sort of more messy price action in the middle. But I don't want to spend too long on it because I really don't think it's that great price action to try and kind of be forcing trades in. But there are trades there. So this was that kind of 15-minute bearish order flow that was starting to kick in. And then, yeah, we chopped around kind of during Frankfurt and London. We didn't really do anything, but this is kind of the extreme of that 15-minute leg. If I sort of sync these up so you can see again what I'm referring to. So here on the 15-minute chart, right, we're pulling back, and then we had this push down, right? So I'd count that as one leg, and then we're coming back up into this area here. So that's a decent area, kind of near the top 25% of the range, right, to potentially look for that short back down into demand. So as price came up into here, we like to see, right, nice aggressive move in, and then boom, aggressive move down, showing big money stepping in, right? This one can look a little bit messy at first in terms of this demand, because you could maybe think that it did its job, because obviously when that candle was created, price came back into it, and then it made that higher high. But the way that I view that is, something in here, right, within this wick is what led to that causing the higher high. And then when prices then come back in to this area here within these wicks, or even within here, right, it should make that higher high. And again, it should come up to take out that high. But what happened? Price reacted, and then it pushed through. So you got the flip and the change of character. And then price didn't come back to it for a little while. So this is quite a good example of, not necessarily potentially giving up. If you set your order and you see price break down, potentially you may want to keep your order on. I wouldn't have been a massive fan of that, to be honest, kind of especially with how, all of this overall price action is and where it is within the range. So personally, I probably would have preferred to play a reaction when price came back up here, and there wasn't anything too clean on the M1. The way I kind of would have viewed that, if you did want to get involved, you have this area of demand, right? Again, it's not the greatest, and that's where the reaction comes and price comes down. But you can see that was just used for liquidity, right? Because there was no inducement for this flip here, and it came up a little bit higher and then took the extreme there. So yeah, that would have been one where I think 2 pips still kept you in that case. You should have been all right depending on where you entered. But yeah, you can see overall just these aren't the greatest of trading opportunities. And then from then on, what happened? Well, what we have here is that's used for inducement. It then mitigates, right, that extreme area of supply, and then we get another leg down. So this is kind of like the next sort of internal range that we're then playing within. So then price comes back up to mitigate that extreme, right? That wick here, this wick here is sort of that last sort of extreme that caused this move here. That's unmitigated because this is all mitigated now from that wick. So potentially you could have been looking, at playing this bit here if you were still happy to take those shorts until we get a bullish M15 change of character, and then price gets a little bit messy coming over here. Doesn't really give anything too clean, apart from this move here, which even then it's you guys can see, right, it's not the best because this candle, if you look there, it says the high was 18016 and the high of that was 18016. So both of those were equal, which means for me that it didn't break the high, so it's part of the pullback, right? Then we get that higher high, price comes in, tries to make a higher high with that bullish candle, and then it fails. We get the change of character, and then straight away when price pulls back, enter at market, 2 pip or 1.5 pips up, just about covers the high. 2 pips would have been more than enough there, and then you would have been in the trade. So a little bit cleaner in the 15 seconds, but yeah, as you guys can see, right, it's this horrible mess that you're trading kind of near the EQ of the range at this point. It's just really not the greatest, but they're kind of the cleanest opportunities that I can see from all of that. But I much prefer the price action that happened afterwards, where we came down with a lot of momentum on the M15 and it tried to have that bearish breaker structure to the downside. It failed to do so, and then straight away you can just see that momentum kicking in. So you could have taken that sort of risk entry on the extreme down here, but personally I would have preferred to have looked for that reaction, right? Because price has to come a long way back down and change character, to get bearish again to come back down here. So what do we get? Price comes in, pulls back, and then makes that lower low, right? So then price comes into supply. Let me draw on supply. In fact, make this full screen so you guys can definitely see what I'm talking about. So we have the buy to sell here, right? Now what happens, this will obviously be a little bit cleaner to see in the M15, sorry, not the M15, the 15 second, but we can see it clearly here on the M1. And really I would advise, if you can see the trades on the M1, you're probably going to avoid a lot more false signals and losses. So it's always probably better, in my opinion, to try and do that as much as possible. So what happens is price comes into the M1, this inside bar, right? Price obviously pulls back. And then what happens, that reaction fails, right? Because it should form a lower low as soon as price hits it, but it goes up higher, closes above that high, and then the next M1 candle, what happens, price comes into it, and then this is where we want to be buying to then catch that move there. So I'll show you quickly on the 15 seconds so you can see what we essentially are playing, but reading it on the M1, if it will load. There we go. So price comes into supply, right, reacts, tries to form a lower low, closes above the high there, and then boom, as soon as it retraces, just enter at market, or if you're quick enough with your limit orders, you can get in with 2 pip stops, more than enough, right? You can cover these lows in case price wants to come a little bit lower, and then you're in a beautiful trade there. So let's get this all back synced up. It has been very slow today. There we go, and jump back in. So yeah, M1 price action was pretty decent there. The only thing that wasn't, that I guess could have been a little bit better than I mentioned a bit earlier, is instead waiting for the M15 change of character, which we didn't get until 4:15, right? To wait for the M15 to then switch bullish again to confirm that potentially this is the high low, and we are ready to go. We then did come back into M15 demand here, right, with that sell to buy, but it was quite late in the session end, nearly 4:45, right, New York's ending. And it's not really when I want to start be looking for trades in here. There's nothing that clean, and then we kind of took off during Asia, and we made a very clear higher high at this point, where we then pulled into that very large 4-hour range. So if we scroll across on the M1, price was trickling up pretty slow into sort of Frankfurt Open, and then obviously a lot of supply came into the market, left some nice liquidity for a very, very simple kind of standard entry that we used to look at, right? Breaker structure to the downside, liquidity, pull back into the extreme, 2 pips up above the high, and then there was just about a 5-hour there, depending on how tight your entry was. Could have got your counter trend trade there, in and out, targeting 15M demand. So it depends on how you drew that. If you obviously had it refined to the one candle, you may have been trying to push that a little bit further, but if you take kind of that more range, essentially that would be your 30-minute, right? Your M30 demand. Then you would have been happy potentially to then look for this long, right? Because pricing came up with a hell of a lot of momentum. It kind of gave us that bullish change of character again, right? That substructure break to the upside, because we didn't take out anything in this leg here, right? This is all part of the up move. All of these prior candles break the prior candles high. So that means that when we pull back, there wasn't actually a change of character, right? There was no minor break of structure in this leg. So technically, it always was bullish, but then we made kind of, that internal higher high again, where we took out this substructure high, and then price pulled back in, and then we went off. So you could have taken, again, a very standard risk entry there. I'm not always the biggest fan of taking those on the clean pushes. But then what happens is we get a pretty clean flip. So price comes in, right? Supply is respected, makes a lower low. Supply is respected, makes a lower low. And then we pull back up into supply. It tries to make a lower low. It fails to do so. It comes up again, tries to make a lower low again, fails to do so. So it's getting a little bit messy. But then what happens? We break higher. So we get that change of character. And essentially this whole section of supply fails, right? So then we look at the last sell before the buy. That causes that flip, that causes that change of character, and then you can buy anywhere within that range. So depending on how you kind of drawn your M1 zone there, if your 2-pip stop arguably may have not got in if you took the whole range. But yeah, you can essentially refine this a little bit more, but it's a bit more kind of advanced in that point, and refined it to, in fact I'll redraw it, this essentially this wick here, right? Because that was kind of the last bit of sell to buy price action that led to the break of the high. So I'll kind of show you what I mean by that. Essentially, if you read each candle as it goes, right? So we have a bearish candle, then price comes up with the bullish candle, right? Then you have the bearish move, so that's another reaction to supply. And then this is the last point of demand that then steps in to actually break the high and cause that price action to fail. So I should actually technically draw that to the low of that wick there, right? So that's the sell to buy that broke the high. And if we then again take a look at the 15-minute, you'll see how it will look a lot clearer, but it can be a bit tricky to see there in the M1. But essentially what that allows you to do then is make sure that you definitely do get triggered into the trade, and you can be a bit more aggressive with your stop loss, right? If you wanted to kind of refine it below this low here. So if you were just looking at the 15-second, right, you'd probably take that range there, right? That sell before the buy, you'd have your entry there, and then 1.5 pips, right, would be more than enough, or you could have your 2 pips, right, near the low. And that, yeah, essentially would have been a pretty decent trade entry there. Just get this back to 1 minute. It will load. There we go. Okay. I believe we were there. I think we're over here, right? Yeah, there we are. So that was a decent buying opportunity in terms of the M15. The only thing that, again, it's not great about it is where are we on the 4-hour chart? Well, it's literally after just rejecting 4-hour supply. But when it's a pretty large zone, right, we're not always going to necessarily just have that 4-hour pullback as soon as we touch the distal. We could have multiple drives into that zone before we see that larger pullback. And like I was saying, we never actually got a 15-minute change of character, right? It stayed completely bullish the whole time because we had this pullback here. Then all of these candles broke the prior candles high, and then this was just a little internal pullback, right? And it stayed bullish the entire time. So maybe that's what I'm saying, generally waiting for that M15 change of character first, which we don't get until over here, is maybe then when you can start to say, okay, I don't want to take those longs anymore, because obviously you're buying pretty high against that 4-hour supply. So yeah, not the greatest of trades there in terms of pricing, but they were there. And then we pushed up in just sort of pre-New York, and we hit that refined M15 supply zone. So we can go take a look at that. Over here, not the cleanest, but the way I kind of view that is you have this area of demand, right? After mitigating this area, created demand, price came back in, it reacted, and then this doji, or the wick of the doji, is extreme, that then caused price to then fail and come in lower. So could have been looking at that, or this candle here, right? But then when you see, it's not always picking the exact perfect candle, but when you actually see how does price react to it, you can see how aggressive, right? Look at that, boom. That's your signal. Get the M1 change of character down here, and then you can take a very standard entry on those buy to sell wicks that cause a low. That for me would count as a flip, right? Because essentially that created the demand. This created the demand to make that higher high. Price came in, tried to make a higher high, and we flipped. We came down, right? Clear change of character there and there. Generated liquidity here, and then boom, there's your entry in short to play that pullback. But you're not just playing the M15 pullback, you're trying to anticipate that now we're going to get that 4-hour pullback, right? So you're anticipating that the M15 will switch bearish, and that means that you have much higher risk reward, right? Because you're playing a 4-hour pullback, you're anticipating an M15 reversal. It's not just an M15 pullback. So this means you can have, you can start targeting potentially down to this 4-hour area of demand, right? So if we were to drag that out on the risk reward tool and we just took that to the distal, right, that unrefined zone is over 20R, right? But obviously we can refine it a lot more, or even try and time that with M15 changes of character, so on and so forth. But I kind of just wanted to make the point of when you can be a bit more aggressive playing those reversals and those pullbacks where we don't have an M15 change of character. It's literally just an M1 entry, but the reason why is because it's the EQ of the 4-hour zone, which we've refined to an M15 zone, and you're trying to play a 4-hour pullback, which will likely give you that 15-minute trend reversal, right? So there's a lot more risk reward when you are going to do that. There was an entry a little bit later on here, kind of just following these series of M1 mitigations, right? Price coming up, mitigating each area of supply, right? We get a series of all of these zones mitigated, so then it takes out this low, and then we're playing within this range. Price comes off this M15 decisional demand. We come up into there where you could have taken a risk entry, or you could have seen a little bit more of an advanced entry here where price comes in. Let me draw this on properly so you guys can see it. So we have this M1 demand, right? That range there. You can see price comes into it. It reacts, tries to form that high, does just about, right? So we get that high there. Price then comes in again here. It tries to go higher, and then it fails with this bearish candle, this candle here, right? And then price pulls back up into that supply zone, and then it goes. So M1, it's quite hard to see there. 15 seconds, probably a little bit clearer, but that's essentially how you can trade those confirmation entries. So you just need to get kind of practice with your eyes seeing these, because they usually are there, but they're not always kind of super clear cut. And this one you've got to be a little bit kind of quick. As you see it, let's see if it looks any cleaner on the 15 second. So yeah, not so clean actually in this one, but essentially that creates the high. Price comes in, reacts, pushes down, and it's coming back up into that whole buy to sell range. So not the cleanest at all, but that's kind of the way I would view that if you were trying to play a confirmation entry on that zone. But yeah, not the greatest trade in the world at all. So let's take a look at the 15-minute once this loads up. So at this point, there's this M15 decisional, price reacts off it and then pushes down. So what that creates is a flip zone, right? An M15 flip zone. Now, just zooming in on the 15-minute chart here. Again, this is very similar to this price action here where all of these candles broke the prior candle's high. So that was all part of the up move. Here for me, all of these candles broke the prior candle's high. Even though we have a bearish candle here, it still broke that prior candle's high, right? So that's all part of the up move. So when we come down, there is no change of character for me. It doesn't take out any low until we take out, well, this for me would be a low, right? That would be a change of character there, but it's pretty much in the same place as the swing low as well. But price fails to close below the swing low. So when we get the spike here, it's just a change of character. It hasn't technically switched bearish, but this is where you can, it's a pretty good sign. It's a pretty weak sign that we are starting to switch that way. We then have this flip zone here, right? The demand that took out the supply that took out the demand here, and that's a pretty nice area to then look for sells to try and anticipate that M15 bearish trend change and that 4-hour change of character. But there wasn't really a clean entry for me that I saw up here. However, what you could have played is a pretty cheeky long. You could have played this sweep here, right, and just push this back up and towards the EQ, up into that supply. So let's take a look at where that would have been. First one being here, right? You could have either taken the entire range, right, either or. Price doesn't come down to that one, so you would have, unless you literally, okay, so you could have potentially got entered on that wick right there, right? So draw that a little bit better. So we have this M1 range supply, right? Price pulls back into it, tries to form a lower low, pushes back up, and then this next candle comes into the top of the range. So that could have been your entry, or a little bit more of a refined one where you have the last buy before the sell that actually does take out the low, and then price comes into it there, pulls back with the inside bar, and then pushes up higher. So then anywhere within this range for me would have been a valid trade. So you would have a few little minutes to get into that trade there. That's essentially where it would have been valid for me, and then 2 pips stop just about covers the low. But I don't believe that ran 5R. So, oh no, it did. Yeah, that went a bit further than I thought. Whoops. Let me get this up a bit higher. Yeah, so you would have got your counter trend 5R there in and out, and that was a pretty tidy trade in my opinion. Or potentially you could have been looking at another entries here, but that would have been the kind of first valid one in my opinion. And then we reject that decisional flip, and then we push down lower, and then this is where we then come down into that larger 4-hour range in towards in a New York session. So kind of out of session there, not really looking for trades around that time. My drawings keep moving around at the moment. let me just sync this up a bit better. So during Asia, we get I believe it's during Asia, yeah, just before kind of Frankfurt, we do get a breaker structure to the downside. So we're then now playing kind of within this range here. And then there's a few areas I was looking at, potentially price coming down lower into this zone, although we'd already mitigated the distal, obviously a few inside bars here. So I didn't necessarily have this marked up on my chart. But like I always say, you don't necessarily have to have every single valid zone drawn on, because what you can do is monitor the price action, right? So when you see price kind of come down aggressively, take out this sort of triple bottom, right? Big sweep of liquidity, and you see what aggressive in, aggressive out, right? That's a sign of big orders being filled. We get that change of character, and then you could have taken just a standard breaker structure entry there, right? Looks like you need a bit of a wide stop. Let's see how that is. Yeah, so may have got triggered, may have not got triggered. But the point I was trying to make about that M15 zone is if you see that sort of price action, you can go look left and go, does it make sense? Yes, it does make sense. Okay, now I'm happy to take the trade. So whether you took that one or you waited for this real big intentions coming into the market, then we get that true change of character. We get the M15 flip as well, right? Notice that inside bar caused that supply to fail. But then what do we have on the M1? Well, we actually have a flip in here because we had this last buy before the sell, right? That took out these lows here. So then when price comes into it, it reacts, tries to form a lower low, and then boom, we get the flip and the change of character. So yeah, definitely more than valid to leave your limit entry order there. I personally probably wouldn't have done that because price had to come a long way back down, change character to get there, and it was a pretty straight, clean push, which I'm not a big fan of. But here's another example of where it does work out. So yeah, I probably would have been waiting for a flip, an M1 flip to occur down here as essentially a confirmation entry, which I can't really find one or a valid one that I can see personally, not even on the seconds time frame, until we get up here, where essentially you're looking for that substructure break. So price pulls back, right, forms that sort of internal lower high, comes down, price comes into it, tries to continue that substructure low, but fails to do so because price then comes up. We get that minor breaker structure, we get the flip, and then that would be your entry there. So in this case, it's not ideal kind of buying halfway up the leg, and you wouldn't have got 5R, I don't believe, to the next M15 high, right? Because at that point, the M15 is still bearish. Let's see how this lines up, the 2-pip stop. Yeah, so 5 to 1 would have been above it. So this is where you may think, well, ordinarily, I don't want to be buying that high, risk reward isn't on my side. But in this case, what you have to anticipate is, well, what's the 4-hour done? The 4-hour has potentially done its job. It's pulled back to demand, right? So potentially now, actually, I'm trying to catch the 4-hour high or low, and where the M15 high is doesn't bother me because I'm anticipating that we're going to get that trend change. So if you kind of have that foresight and you kind of ignore the M15 and you just say I'm playing that 4-hour high or low, then right, you can then have the confidence and the ability to potentially hold right this trade for a very high risk reward trade, which probably peaked over 25R there. So that's kind of really have to read between the lines of when you want to sort of buy against the M15 quite high up there, not really with risk reward on your side purely from an M15 perspective, but what you're doing is using the 4-hour chart to anticipate that the pullback's over. You're trading with the 4-hour, right, and we're trying to get that higher high and anticipate that bullish M15 trend change. So we did get that. The M15 switched in line with the bullish 4-hour. So at this point, you can start to look for shorts to play pullbacks, but remember, it is a bit more aggressive. So let's take a look at that. I believe this was pre-New York. There was a pretty clean flip that happened where we came, as soon as we tapped into that M15 supply zone, what did we get? Well, price came into M1 demand, tried to make a high, failed to do so, and then boom, you can enter straight away. Came a little bit lower, came back up to then mitigate the extreme, where you could have taken another entry if you weren't already in, but we didn't quite run 5R, so potentially would have been a break even if you took off your risk around 4R on this trade. And then there was a nice long, which was a little bit tricky to see because again, it's quite high up in the leg, right? If you're waiting for price to pull back, it's not always going to happen. But if you follow those series of M1 mitigations, as you can see here, right, we have demand, high, falls the demand, comes back, demand's holding, right, and then we have that another leg up, and then price comes all the way in, builds liquidity, sweep that liquidity, right? We have the flip here. Again, you have to kind of read between the lines on the M1, but you're reading what would be in the lower time frames, right? Because this is obviously demand. Whoops. So let me take this slowly just so you guys can follow. So we have our M1 demand here, right? Price comes into it. That's the last point of supply that comes in, right? That last buy before the sell, that then all of these counters go straight down. So then we mitigate that extreme demand over here, right? Which you could, take a risk entry, a little bit aggressive in my opinion, but then what happens? Price comes into supply, tries to form a lower low, it does chop around for a little bit, and then boom, demand steps in, and we get the change of character. So then, right, that's your range to enter on, and then you're in that next tidy entry. So yeah, again, not the most well priced trade in the world, but it's just understanding, the order flow here, and whether you're happy to take that risk, assuming that these lows are going to hold. And then what do we get? We get really clean price action there, right? Sweep liquidity, flip, change of character back into that demand area, and then we can buy it and anticipate. Yeah, again, just getting that higher high and price rocketing to the upside. So if you're always waiting for price to pull back down to the discount into the extremes, then you will just have to accept that you're not always going to be able to catch some positions, as they will just continue to go. So obviously that then caused this to be a supply to demand flip, right? Because this is demand that took up supply. We also have these buy to sell wicks here, so I will be looking at that tomorrow. And then eventually we did get that for our higher high, and yeah, the M15 is now bullish. So I've kind of been classifying this as my M15 range because we did get a 15 pip pullback, which is pretty decent for the 15-minute chart. So I'm kind of being, this is kind of the range that I'm picking price in at the moment. So we'll be looking for potential longs in here tomorrow, but not really well priced at all. We are within 4-hour supply. However, like I said, we've already kind of had that reaction and it's failed. So I'm not really paying too much attention to this in terms of trading against it. I would more just be cautious of longs from here, just because we've had a 4-hour break of structure. What do we expect after a 4-hour break of structure? We expect a 4-hour pullback. So we may potentially want to come down into sort of being a bit more unrefined, kind of just taking the larger range. I'd be looking at this area of 4-hour demand here, but of course you can refine it to the last sell before the buy as well. And then this red line would be that there is the EQ of that 4-hour leg in price action. So can look for more aggressive longs if they do set up in London, but you maybe want a little bit more aggressive with your targets, because potentially we could just have a bit of a reaction just to generate liquidity, and then we may get that change of character or that trend change, depending on how you define your range, to then come down lower in towards these lower areas of demand. But yeah, ultimately just going to be looking for those bigger longs to play that up into that daily area of supply. But until the 4-hour switch is bearish, I'm going to kind of run with that blind assumption that the daily is just going to be enough to facilitate a pullback, and we are going to break out higher and get those higher highs. But of course, if we look for those shorts up here, you can try and hold on to a little bit of volume and potentially anticipate that we are going to come down lower and take out that double bottom at the bottom. But yeah, I'd rather kind of just focus on the 4-hour and the M15. And I'll be looking for longs from here, potentially, if they're still there, but we may break down through Asia. And then if we get that trend change, right, that's definitely not the one I meant to click. Get rid of this rubbish. If we get that M15 change of character right, then we know we can look for shorts to play that deeper into the 4-hour discount. And again, if we get that M15 change of character, then we play the longs and we're in line with the 4-hour to then get that higher high. So yeah, that's pretty much it. Don't think I have too much else to add in terms of trading opportunities. Obviously, the rest of the day today, we just were very, very bullish. Don't really want to be buying that high. Definitely don't really want to be looking for shorts kind of until we get that M15 change of character, or at least we come up into that sort of fresh area of supply. And yeah, look to see if there's any refined zones within there that you've anticipated. Then you can be a bit more aggressive with playing those M1 shorts with just an M1 change of character. But yeah, before I waffle on any longer, I'm going to leave that there. Hope you guys have a good end to the week, and I will chat to you in the weekend. Cheers, guys.